Yeah, good day, welcome to this channel. What we are going to do today is top-down analysis. So what is top-down analysis? It's the ability to analyze our chart from the higher time frame to the lowest time frame where we are going to take our trade. So for our top-down analysis, we are going to start from monthly time frame, and we are on an asset called Bitcoin, Bitcoin USD. So we are going to monthly time frame. That's where we are going to start our top-down analysis. As it implies, top-down analysis means from the top, from the highest to the lowest. So that is where we understand the language of the market, what is happening in the market, what the market is saying. So let me delete all these ones. So that we have a clean chart. So let's, as you can see, we are deleting the analysis we have done before on the chart. So just hold on. So let's clean the chart. Let the chart be clean. Can you see the chart is now clean? So this is monthly time frame. Each candle that you are seeing here represents a month. This is the month of September. As you can see, it remains 23 days, 18 hours. So this is month of September on BTC USD. Month of September. As you can see, this month of September. So what are we going to do on monthly time frame? The only thing we are going to do on monthly time frame is you count your candlesticks. The first 4 candlesticks. That is where you are going to draw a rectangle. You draw a rectangle. Let's go. We're going to draw a rectangle. Let's choose the rectangular tools. Here is the rectangular tools. So we now place it from the top, from the most top time frame, the most top candlestick, the highest candlestick, either by wick or by body. Highest candlestick to the lowest candlestick, and this is the lowest candlestick. That's the number 4. Then we extend it. That's it. So as you can see here, this is 4 rectangular candles. First 4 candlestick that we are to draw rectangle on. So as we have drawn the rectangle now, so what next is we are going to look our price line. Where is the price line? This is this thin line that leads to this green. This is the current price of Bitcoin. This is the current price, that is 110,612. $110,612. That's the current price of 1 Bitcoin. So this line is what we are going to study. Is what we are going to use. Is it close to the up or close to the down? That's what we need. Which area is the line close to? Very well. So let's choose a line to indicate that, to check. If you put this line here, you say this is very close. This is close to the top, or this is the middle. Let's say this is the middle of the rectangle. If you check it very well, this middle should be around here of the candle. So some pips close to the middle, it shows that the price is ranging. If it is somewhere top, let's say if it is somewhere here, here, around here, around here is still ranging, it's still at the middle. But anywhere after this, down, that is downside, it shows that the direction of the market is what? Is bearish. If it is down like this from here downward, the direction of the market is bearish. But if it is from around here upward, the direction of the market is bullish. So that should be in our mind. As we can see now here, the price here is nearly bearish, but it's still ranging because it's very close to the middle. It's still close to the middle of the rectangle. That is what our bias here now is. It is either we take side of ranging market or consolidation, or we say in few movements the market is going to be bearish because it's closing to the downside. So let's have our bias to be bearish despite its range, but let it be, because it has moved beyond the middle. So let our bias be bearish. So what we are going to be looking for is selling opportunity in a lower time frame. But we are going to, before then, we are going to analyze our zone. We are going to analyze our zone, because there is a formula that I used to tell my student that if you are analyzing your chart, always remember this formula. What is the formula? The formula is DLE, 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 DLE. D D D for direction, D for direction, DL, L for level, level, E, E for entry, E for entry. Then last one, which is another E, E for exit. So this is a formula that I used to tell my students to use. So when you have this formula, you should be remembering this formula, that before I can do anything, I need to know the direction of my market. I need to know the direction of the market before I do anything. And what is the direction of the market? How do we know the direction of the market? It is by doing our top-down analysis from monthly time frame to down. So as you can see now, this market is if you study our monthly time frame on this chart, this market is bullish. This market is bullish. Is bullish. But since the market is ranging, the market is retracing. So if the market is retracing, it is only if you want to if you want to trade on retracement, that is when we say the market is selling. This what we are having now. Except what we want to say, we want to trade the retracement. You say the market is selling. So we already we have, as we said earlier, that our bias can be bearish, but generally the direction of this market is what, on monthly basis, on monthly time frame, is bullish. This is the direction, as we can see here, direction is bullish here. So because we have, what makes it to be bullish, we have uh, we have consecutive higher high, higher low. Here we have higher high here, we have higher low, we have higher high, we have higher low. So this is higher low, this is higher high. this is higher high, this is higher low. So in that regard, we have to keep our bias that the direction of this market is what is the direction of the market is bullish presently, but the market is ranging, is consolidating at present. So we have to take our patience and see where we are heading to, so that we not make any mistake on on the action we are supposed to take. Okay, so having done that, we have discovered, we have analyzed our monthly chart. So let's move to the weekly. We don't normally do much on weekly. We don't normally do much on weekly. So this is the middle. The blue line is the middle of the monthly. It's the middle of the monthly four charts. Four candlestick. So we can remove them as we are through. Immediately we are through, we are done with it. We can remove it. We can remove it. So let's remove the rectangle, then let's remove the line that we use. So what do we need now? What do we need to do now? We need to draw our zone. There is a zone that is very open to us here on timely, but the best time frame to draw our zone is on daily time frame. You don't need to do much on weekly. Let's go to our daily time frame. So this is our daily time frame. What do we have here? How do we draw our zone, our level? That is the second, if you can remember the formula DLE that I wrote here sometimes back now. So if you can remember the formula DLE, I think we drew it under monthly time frame. Let's see if you can see there. Yes, this is it. Our DLEE, direction level entry. The level means our support and resistance or zone. So from there, so let's move to our daily daily time frame. So how do we map our zone on daily time frame? We have to look for reversal candle. You have to look for reversal candles. You have to look for reversal candle. How do we know a reversal candle? A reversal candle are candle. I mean, the reversal candles are candles where you see a green staying side by side with a red candle, or a red stay side by side with a green candle. So meaning that when you see them together like that, it means that a reversal has taken place there. So what will you do? Then you now draw a a thick line a thick line to represent your sun, meaning that at this junction, at this sun, the reversal has taken place. Reversal has taken place. So meanwhile, you have to let it be indicated, so that whenever your price get to that place, it is either you enter from the reversal, or you enter from the break and retest. So that's how a trade usually be. So trade usually be from price move from zone to zone. When the price get to a zone, it is either break it up or down, or reverse. That is how price move. There is no magic about it, my people. There is no magic about it. Price move from one zone to another. So if price will pass through a zone, it has to break it or reverse. So that is it. So how do we let's start. Which zone now is very close to the current price. To the current price. Now which zone? We have a zone here. This zone, this particular zone where I put the broken where I put this broken line, here is a zone. So that is our first zone that we need to consider here. So let's choose our rectangular tools to draw the zone. So let's indicate the zone there on daily time frame. Have it at the back of your mind that you are starting your zone identification or zone drawing on daily time frame. So here is the zone. Here is our zone. You have to put it at the top of the body of the candle, not at the top of the wick. It's on the top of the body of the candle. That is, it will be a closing of bullish candle and opening of a bearish candle. That's where you put your zone. So this means that then which one is the next? We are going to see that if price started reversing, if the price started reversing from this candle, then it may come down to this downside. The price may come down to this downside. How are we going to know that whether price will break this zone? So we are going to indicate it again that a zone, we are going to put a zone there. Then we can copy this zone. You can copy it and paste it there. You can copy this zone and paste it there. Clone. Click on clone. Then you carry it. You carry the zone, the bar here. Then we place it like this. We place it like that. So this is an indication. This is telling us that if price should come up, to this zone, it is either reverse or break it up. After breaking and retest, the price will start going up. The price will start going up. The price will start going up to the next zone, which is here. To the next zone, which is here. So we should have that in mind that price move from one zone to another. The price will go to the next zone, which is this place. So that should be at the back of our mind that if price should break this zone, the next zone it will come. This one is too close. It's too close to this zone. It may break this one, and the next zone it will come is this. So we may also indicate the zone. Let's draw that one too before we move to the next time frame. Let's copy, let's clone this present zone. Let's clone it. Let's clone it. We want to place it well. So we have, if price should break this zone, that you are seeing the broken lines, the next zone it will move to is this zone. So it means that if this zone is broken, it's been break, and it's retested, it's been retested, then the next zone it will move to is this place. So we should have that at the back of our mind that price move from zone to zone. If eventually price come to this zone and break it, it means that where is the next zone? We must always look to our left. Always look to your left. The left of your chart means the past. You must always look at our past in the chart, the past in the chart. So if the price should break this zone, if it should break this zone, the next zone should be here. The next zone should be here. So, and if this one is breaking too, the next zone is there. All these zones are very, very important. You must have it at the back of our mind. This same zone is still this same zone here. It's still this same zone here, this zone. Well, it is this zone that caused this. It is this zone, this one, that caused this one. So we should always look at our left. Because if you are trading a sell from the top, if you are selling from the top, and your price got to this place and you didn't put your take profit here, then it will reverse, because this zone stopped caused this one. It is the one that caused the price to move back, to reverse back. So we have to put everything that we see here in at the back of our mind, that for every zone price may reverse or break it up. So we may need to draw a zone here too. Let's copy a zone here. Let's copy a zone. You have to lift that zone from where it is to this place. No, this one is already existing. Put it here. Then we stretch it out. So that's a zone. Let's place it well. Let's place it well. You have to place it well. So that's a zone. After breaking of this, then it moves to the next. Price will then move to this next zone. This is the next zone. This is the next zone. Price will then move to this next zone. So let's move to the next time frame. Next time frame, which is 4 hour. 4 hour. You can see that wherever we have our zone, price must react. And also have it at the back of our mind that we must adjust our zone as we are changing our time frame. As we are changing our time frame, always adjust. Let's adjust this. The one we are seeing at the top is the week. Is that week that are formed at the daily time frame. So let's adjust this one too. You have to adjust your zone as you are moving. So where do we need to draw our next zone here? Where do we need to put our next zone here? The place we need to put our next zone is this one. Let's copy this one and put it there. Yeah, it has placed itself. It has even placed itself there. It placed it right, very right. You can see that other prices reacted, like here, reacted on the zone. Other prices reacted on the zone. So you can see we can stop there. Except you want to put another zone here. You want to put another zone here, so that after this consolidation, because there is a consolidation here, that after this consolidation the price may move up, the price may move out of the zone. Then also let us adjust. Okay, it is okay like that. It's okay. maybe we should put another zone here, and let's represent it by a line, so that it won't be cumbersome with drawings. Let's put horizontal ray. Let's not to know, just to indicate that there is also a zone there. Let's change the color to green. Show that there is also a shown there. So the next time frame we are going to move to is the 1 hour time frame. I don't want this video to go beyond my expectation. Oh, the network is holding. Okay. Now this is 1 hour. As you can see that I told you that in that video, in that when we are analyzing the monthly time frame, that the market is ranging. That the market is ranging because the line beside the uh, rectangle is close to the middle. You can now see that at 4 hour time frame we saw a ranging market. At 1 hour time frame the market is still ranging. This is a ranging market. You cannot do anything here. So what we are going to do is we are going to put a zone here, just to indicate that the market is ranging around here, or not to allow our chart to be too cumbersome. Or we may do it because of some beginners, we may put a zone. You may also put a zone there. Let's put a zone there to indicate that the market is ranging. So the market is ranging. So the market is ranging. So what we are going to do, just put it there like this. Anytime we have a breakout or rejection, then we take an action. So the market is ranging there, as we saw it under 1 month time frame. So the next thing is we are going to choose our time frame to take our trade. That's 30-minute time frame or 15-minute time frame. I usually check from 30 minutes first. That's where we take action. If you see an indication that the market is going to be traded, then we make a trade there. So we must understand how to analyze our market very well. So here is a ranging market. You have to wait for a breakout from, let's say, from here. You have to wait for a breakout there. So anytime the market move out of that, and we see a confirmation that the market has broke out of the consolidation, then we make a trade there. So how do we know the amount of pips that we are going to trade? Like from here now, from this particular line to this consolidation phase, we can measure it with our measuring tools. From here to here, you can measure it like this. Meaning that if the market break out of that place, you can trade 48 pips. You can trade 48 pips from there. So it's very easy. Then we use our loss side to determine our profit. So that is that. So maybe in the next video we are going to do another analysis that will be very clear to us. Thank you for your time.